The most common question we get asked is, how much life insurance do I need? The answer is really all about your circumstances. If you have access to unlimited funds, you probably don't need much in the way of life insurance. However, in the event you don't have unlimited access to funds, like most of us, does it concern you that the family has sufficient cash to provide a reasonable standard of living should an untimely death, total disablement, or major trauma to either spouse become a reality tomorrow? If you don't have sufficient funds or cash available, you need to ask yourself, how much do you care about the future financial security of your family? If a month ago the major income earner died or became totally disabled, what financially needs to happen? Would you like to lose or keep the mortgage? How much income would you need after tax and for how long? Where would this come from? Who should take the risk, the family or an insurer? Let's look at an example. Bob and Jill are married with 2 young children. Jill is a 45-year-old stay-at-home mum and Bob earns $80,000 per annum. They have a $450,000 mortgage. Key points to consider. Do you want to repay the mortgage of $450,000? How is Jill going to maintain $80,000 per year without Bob around? Would you like to lose that mortgage? Easy question to answer. Jill wants the mortgage gone, so she needs $450,000. How much income will Jill need and for how long? Jill needs a lump sum of cash to invest in income-producing assets, which will provide her with regular income for at least 20 years until she reaches age 65. Where will this income come from? An average investment returns 4 to 5% gross before tax each year. Jill needs $80,000 per year for the next 20 years. To achieve the above, she will need to start off with a lump sum of $1,087,226. So with the mortgage paid for and the income taken care of, this is how much she needs. Mortgage, $450,000. Lump sum, $1,087,226. The total required, $1,539,226. Okay, we've worked out how much they may need, but now what? In the beginning of this video, we said it all depends how much you care. Therefore, Bob, as the main income owner, needs to ask himself this question. Am I better to pay a regular premium to an insurer and let them take care of the mortgage and future income for the family? Or does he take the risk of his family's future financial security, leaving them with a $1.5 million shortfall? Makes you think, doesn't it?